How are you? So I thought we will spend at least an hour. Something is better than nothing. So we'll get started. Yes. Hi Chitra, very good evening. Hi Nilesh, hi Karthik. Yeah, fine. So we'll quickly get started with estimated tax payments. Yeah, go ahead. Which of the following is not an estimated tax period? Jan to March, April to June, June to August, and September to December. Go ahead. For some reasons my video is not coming up here. I don't know. But here I'm able to see. Why is that so? Okay, fine. As long as I'm audible, I'm fine with it. Yeah. So yes, B is the right answer because it is April 1st to May 31st or April 1st to June 15th. It's not the other way around. Yeah, good. Yes, B. Not April 1st to June 30th. Yeah. Jan to March, April to May, June to August, September to December. Yeah, add 15 days for the due date. Yes. Yes. Very good. Yeah. April 1st to May 31st. And then June 15th you have to pay the taxes. Very good. Nice. Next one. Santosh made estimated tax payments of $500 and received an automatic extension of time to October 15, 2017 to file his 2016 income tax return. When he filed his 2016 return on the extension due date, he paid an additional $200 tax. On October 10, 2020, he filed an amended return and claimed a refund of $700. How much refund is Santosh eligible to receive? Go ahead. Yes, $700, right? That $500 plus that $200. Yes, eligible full because amended return within 3 years from the due date. Very nice, very good. Which of the following may be subject to backup withholding rules? Interest, non-employee compensation, barter exchange transactions, all of these transactions. Which one? All simple questions. All are subject to backup withholding. So whether you get interest from a bank or you get a non-employee compensation. Now for non-employee compensation, the form is 1099 NEC, and also barter exchange transactions, and things like that. For all these things, the backup withholdings will apply. So D is the right answer. Next, fourth one. If a taxpayer is subject to backup withholding, what is the required rate? Easy one. Go ahead. Ping the percentage or the alphabet. Yeah. Yes, 24%. Yeah, C, right, 24% linked to fourth lowest marginal tax rate. Very good explanation. Yeah. Next question. I don't know why I am not visible today. Just like Mr. India, I have become Mr. iLead today. Anyways, I hope I am audible. Yeah. Your clients, Mr. and Mrs. Nagraj, advise you that they are expecting their first child. Wow. In anticipation of reduced income due to a partially unpaid maternity leave, they would like to reduce their paycheck withholding to help meet their monthly budget needs. What form do you recommend they use to review their withholding status? Simple questions. This is on withholding status. That's all. Simple. W4 withholding allowances, and people keep an eye on this W4 also, because especially people who are parallelly doing EA and payroll, go through that W4 video that I have done in the LLC section. iLead Tax LLC I have done that, so take a look at that also. Yeah. And if you're looking for any job in payroll taxes, make sure you are strong on part 1 and also on this W4 thing. Yeah. Yeah, W4 is the right answer. Yes. Form W4 used to review withholding status, right? Employee withholding allowance certificate. Good, Chitra. Yeah. Okay, next one. What is the highest individual income tax rate in 2020? Very good. Yes, earlier it used to be 39.6%, now it is reduced to 37%. Yes, D, very good. Yeah. Next one, फटाफट कर देंगे, छोटे छोटे हैं. Yeah, ये थोड़ा बड़ा है. Madhuri is retired and her only income is from pension and some investments. She had no withholding and is not eligible for tax credits. Her last tax year while she was still working full-time was $2,760. This year her tax totals $1,300. It will probably be the same for the following year. What should her tax preparer advise Madhuri to do regarding her tax liability for the next year? What should he advise? Make estimated tax payments because she has no withholding and her tax will be more than 1,000. Do nothing because she is within the IRS guidelines for not being penalized for taxes due. Then submit form W4P to request withholding from a pension. Then either make estimated tax payments because she has no withholding and her tax will be more than $1,000, or submit form W4P to request withholding from her pension. Which one is the right answer? Go ahead. Good. Okay, D. Yeah, right. Yeah, it is A or C actually. Yeah, correct. She must make estimated tax payments because she has no withholdings, and her taxes will also be more than $1,000, right? And in case she doesn't want that withholding, then she should file that form W4P. Yeah, right, perfect. If she doesn't want to make estimated payment, she can submit form W4P. Yeah, A or C. Very good. Good Ripali, good Nilesh. Yeah, right. Estimated taxes will be greater than $1,000. Okay, good Sumit. Nice. Okay. When it comes to estimated tax payments, just remember that $1,000 thing. Okay, because there are many questions which revolve around those $1,000. So just make sure that you remember that funda properly. Yeah. Next, Dr. Sam and Joy are married and estimate total income of $193,300 for the tax year 2020. After estimating allowed itemized deductions and exemptions, they anticipate a 2020 taxable income of $174,500 with a total tax due of $39,040. They estimate withholding of $32,960 during the year. For tax year 2019, they paid a total of $42,000 in federal income taxes and had an adjusted gross income of $185,000. For the tax year 2020, calculate the amount of the required estimated tax. 2176, no estimated tax payments, 9,040 or 6,080. Go ahead. A little bit of maths is involved here. Just remember that 90% of tax on the current year and 100% of the prior year. Sorry. And 110% if the AGI is over 150,000. Go ahead, calculate. Yes, good. Total tax, yeah, 39,040, at least 90% of the current year taxes or 100% of the previous year taxes must be paid. Okay, so the tax required for 2020 will be 35,146, 35,136, okay, minus the estimated withholding during the year. They estimated this 32,960. So still they have to pay 2,176. Still there is a estimated tax payment requirement of 2,176. Yeah, very good, Chitra. Very good. Good, Sumit. Yeah, nice. Good. Take time, understand the concept well. Yeah. Hi, Vishwa. Good. Nice. Good, Nilesh. Very good. Yeah, smaller of 90% of tax for the current year or 100% of the previous tax year. Very nice, very good. Okay, now a taxpayer had total federal income tax in the previous year of $21,000. In the current tax year, the taxpayer received a bonus and his tax increased $4,500. The taxpayer has long-term capital gain of $4,000 with a tax of $600. The taxpayer's withholding was increased to $23,700. To avoid a penalty for underpayment of estimated tax, the taxpayer must. This is also both. Okay, do nothing since the withholding exceeds 100% of the last year's tax. Do nothing since the withholding exceeds 90% of the tax due this year. Do nothing B since the withholding exceeds 90% of the tax due this year. C. Do nothing since the withholding exceeds 100% of the last year tax. D. Pay an additional $5,100 to equal 100% of tax due. Check. Go ahead. Okay. Chitra. Yes. B and C combined together is A. Right. Good. Right. See, step 1 here we will identify what is the 90% of the current year tax. Okay. For that we have to first identify what is the current year tax. Now current year tax you see, current year tax 21,000 plus 4,500 plus 600 is equal to 26,100 into 90% is equal to 23,490. 23,490, which is greater than the current year withholding of 23,700. Okay, so 210 is more actually, so that's absolutely fine. So no additional estimated taxes are to be withheld. Okay, step 1, I mean the first condition is that at least 90% of the current year tax liability. Current year total taxes are 26,100 into 90% is 23,490, and then 100% of the previous year taxes. What is previous year taxes? The very first line says 21,000, so 100% into 21,000. So but the taxes that is withheld for this year is 23,700. So here also both the conditions are satisfied, so no additional taxes are required. Current year withholding 23,700 is greater than the 100% of the last year's income tax. Very good. 21,000. Rupali, good. A. Option A, as it has both B and C. B and C. So do nothing, right? Very nice. Good. 10th. Estimated tax payments must be made for tax year 2020 if both of the following apply. The taxpayer expects to owe at least so and so dollars in the tax for 2020 after subtracting his withholding and credits, and the taxpayer expects withholding and credits to be less than the smaller of the so and so percentage of the tax to be shown on the 2020 tax return, or 100% of the tax shown on the 2019 tax return. See, these years can change. Okay, just understand the concept. So somewhere, if you see that we are in 2021, we still see 2019, 2020. I mean, just the numbers change. The concept remains the same. The years may change. So sometimes, even now, we get clients who have to file returns from 2009 and all. So in case, you get something like that, we file, certain delinquent tax returns also. So if you are filing, something like that, then you should know the previous year taxes also, previous year numbers also. Okay, so just understand the concept well so that you can address it properly. Good, go ahead. That's all. 1,090%. We have been solving so many questions back and forth. $1,000 and that 90%. Yes, very good. B is the answer. Perfect. So next one. To avoid paying the current year's estimated tax payments, if at least 2/3 of gross income is from farming, the taxpayer can file Form 1040 by March 31st of the following year and pay the total tax due. Either pay all of the current year's estimated tax by Jan 31st of the following year, or file Form 1040 by March 1st of the following year and pay the total tax due. File Form 1040 by March 1st of the following year and pay the total tax due. Then pay all of the current year's estimated tax by Jan 31st of the following year. Go ahead. Very good. If 2/3 of the income is from farming and fishing, and you have to file your 1040 by March 1st of the following year and pay total tax due. Current year estimated taxes are not required. Yeah. Now if you see option C, yes, of course that is right. And D also, if you see, pay all of the current year estimated tax by January 15th. Okay, so one of the following must be satisfied. Chitra, good. So one of the following, must be satisfied. Yes, C is the right answer. But the explanation is this: Jan 15th, and then if 2/3 of the income is from fishing or farming, then either you pay all of the current year estimated taxes by Jan 15th, or you file the current year tax return by March 1st. One of these two must be satisfied. Yeah. Now in this scenario, estimated tax payments are not required. Yeah. Wow. Suchitra must make estimated tax payments of $4,000 for the tax year. She makes the following payments. First payment 1st to 6th. Which of the following statement is true? Okay. Go ahead. She has not made any timely payments because none of the payments were made by the required IRS schedule. Next, she has not made timely payments because her 4th payment was not made by June 15th. Then she has made timely estimated payments. Okay, She has not made timely payments because her second and third payments were not made by April 15th. Go ahead. Yeah, did you mean other businesses? I mean others? That's for the September 1st to December 31st, they have to pay by Jan 15th. We saw earlier 4 periods. That's by Jan 15th. Yeah, our enrolled agent has explained it very beautifully. Very good, Vishwa. Very nice. For you, it is again, a good revision for you. Okay, yeah. Vishwa is an enrolled agent already, as most of you know. Yeah. So Jan to March payments must be made by April 15th, April to May by June 15th, June to August by September 15th, and September to December by Jan 15th. Okay, so these are the due dates and the timelines. So the total estimated payments that has to be made is $4,000, and the breakup of that is given 1,000 plus 500 plus 500, 2,000. And again $1,000, $3,000, then 500 plus 500, $4,000. Okay, so $4,000 have been spent like this. Now here he has also given the breakup, total $4,000. So by April 15th, the person made $1,000. Okay, the first due date falls on April 15th. Again, the second due date by June 15th. So by June 15th, again 500 plus 500, $1,000. And third due date falls on September 15th, right? By September 15th, again fourth payment, $1,000. Next, the last one falls on Jan 15th. So October and December month ka payment that falls on Jan 15th, so another 1,000. So all timely estimated payments have been made. So option C is the right answer. Very good. 4 equal installments and timely estimated payments. She made all her payments before the due date. Very good, Chitra. Nice. Okay, that is. Vinaya made no estimated tax payments for 2020 because she thought she had enough tax withheld from her wages. In Jan 2021, she realized that her withholding was $2,000 less than the amount needed to avoid a penalty for the underpayment of estimated tax. So she made an estimated tax payment of $2,500 on January 10th. Vinaya filed her 2020 return on March 1st, 2010, showing a refund due her of $100. Which of the following statements is incorrect regarding the estimated tax penalty? If Vinaya owes a penalty for any quarter, the underpayment will be computed from the date the amount was due to the date the payment is made. Next, Vinaya will not owe a penalty for any quarter because her total payments exceed her total liability. Next, C. Vinaya could owe a penalty for one or all of the first 3 quarters even though she is due a refund for the year. Next, Vinaya made a sufficient payment for the quarter ending December 31st, 2020. Chalo, which one is incorrect? Go ahead. Which one is incorrect? Yeah. Vinaya will not owe a penalty for any quarter because her total payment exceeded her liability. Correct, no? So in Jan 2021, she realized that her withholding was $2,000 less than the amount needed to avoid a penalty for the underpayment of estimated tax. So she made an estimated tax payment of $2,500 on Jan 10th. But by Jan 15th, she paid, right? So there won't be any penalty for her. I mean, she doesn't owe. The only thing is she could Vinaya could owe a penalty for one or all of the first 3 quarters even though she is due a refund for the year. The reason for estimated taxes to be put is that to ensure that the tax liability is paid in every quarter in a proper systematic way. Okay, so though at the fag end, in the last quarter somebody pays everything, still whatever has been missed out for the first 3 quarters, there will be penalty that will be applicable and it will be payable. Okay, so that's what they have mentioned. Vinaya could owe a penalty for one or all of the first 3 quarters, even though she is due a refund for the year. The C answer, if you see, that statement is wrong. Now, Vinaya will not owe a penalty for any quarter because her total payments exceed her total liability. Yeah, Nilesh, false penalty for every quarter if estimated taxes not paid within the due date. Yeah, C is the right statement. So if you see here, C is the right statement, but the question that is being asked is which of the following statements is incorrect. Statement B is opposite of C here. Okay, so because they are asking what is incorrect statement, so we will select incorrect statement as B. Yeah, each period has a specific payment due date. Even though she is expecting a refund, she might end up paying a penalty for some other quarter in the tax year. Yeah, good. Yeah. Yes. Next one. Fill in the blanks. Generally, if a taxpayer files his form 1040 by so and so and pays the rest of the tax due, he will not need to make the estimated tax payment that was due on go ahead. By when you should file 1040 and by when the estimated tax payments are not needed. Go ahead. Yes, so if a taxpayer files his form 1040 by Jan 31st and pays the rest of the tax due by Jan 15th, he will not need to make the estimated tax payments that was due on Jan 15th. Okay. Pays the rest of the tax due also by Jan 31st. Yeah, then he will not have to pay estimated tax payments by Jan 15th. Yes, Chitra, good. Right, file by 31st and skip the estimated tax payment for Jan 15th. Right, so 2 weeks grace period. Chalo, next one, 15th. A taxpayer had adjusted gross income of $98,000 and a total tax liability in 2019 of $20,000. In 2020, the taxpayer has a tax liability of $25,000. The taxpayer withholding was increased to $23,500. He will file his tax return for 2020 on April 10, 2021. To avoid the underpayment of estimated tax penalty, the taxpayer must do what? File an annualized estimated tax computation, pay an additional 1500 by Jan 15th, pay the additional 1500 by April 15th, or do nothing. Go ahead. Right, so anytime there's a question on estimated tax payments, just remember those two things: 90% of the current year tax liability or 100% of the previous year tax liability. Okay, so 90% of current year tax liability is what? Vishwa has given that 90% of current year tax liability, 25,000 into 90%, 21,150, but his withholding is 23,500. So first condition satisfied. Next one, 100% of previous year liability. Previous year liability is 20,000. So 20,000 into 100% is 20,000. But he paid 23,500. So both the conditions are satisfied. So he satisfied the minimum tax payment requirements. So he need not do anything. Good, Nilesh. Good. Nice. So D is the answer here. Okay. Next one. Regarding the underpayment of tax penalty, which of the following statement is false? The interest rate for underpayment of an individual's estimated tax is set at a fixed rate of 5%. Form 2210 is used to calculate the penalty. No estimates are required if withholding for each period is at least as much as 1/4 of the required annual payment. And if the annualized method is used for one payment, it must be used for all payments. Good. Which one is false? Yes, all the statements are correct here except A. Form 2210, yes, it's certainly used to calculate the penalty on the underpayment of taxes. Then no estimates are required if it's 25% every quarter. C. Then annualized method, yes, it must be for all other payments. So B, C, D are right. Now here when it comes to A, it will be the market interest rates. So it is not a fixed rate, and it will keep changing every quarter. So A is the false statement and A is the right answer. Yeah. Yes. Good, Nilesh. So next one. When can a taxpayer use the short method on Form 2210 to calculate his penalty for underpayment of tax due? Taxpayer paid taxes under the annualized method. Either taxpayer made no estimated tax payments for the tax year, or taxpayer paid estimated tax in 4 equal installment amounts on the due dates. Then C, taxpayer paid estimated tax in 4 equal installment amounts on the due date. D, taxpayer made no estimated tax payments for the tax year. Which one do you think is the right answer? Go ahead. Yes, the short method on form 2210. When no estimated tax payments are made, or estimated tax payments are made in 4 equal installments. One question is compulsory on estimated tax payments or underpayment of penalty, so be prepared for that. Okay, now here, which of the following taxpayers may be charged a penalty for not making estimated tax payments? Just remember those 3 amounts, 90%, 100%, of course 110% also, and then $1,000. 4, 90, 100, 110, and then $1,000. Usme rehta, everything revolves around those 4 things only, just like our 4 courses. So Savitri's withholding was 100% on the tax shown on her prior year's tax return. Maruti's total tax is 1657 for the year. His withholding is 417. His 2019 tax was 2000. Dhoni's total tax liability is 1044. After withholding, he owes $640. Diana's withholding was 90% of the tax shown on her current tax return. Go ahead. Which one is the right answer? Yes, so if we see here, A and D are scored out. Savitri withholding was 100% of the prior year tax. Then Diana's withholding was 90% of the current year tax. Now if you look at Maruti's total tax, that's 1657. Okay, 1657, and his withholding is only 417. The prior year tax is $2,000. So 2000 into 90% is 1800. Okay, and current year tax is 1657. Even if you do the 90% of the current year tax and then 100% of the previous year tax, still, his withholding is only 417. So he will definitely be charged a penalty for not making estimated tax payments, and it will be computed on Form 2210. Okay, so B is very, very clear. So B, yeah, good, Imanshu, very good. So B is the right answer here. Yeah. So next one. Feroz worked as a clerk and received a Form W2 that reported federal income tax withholding of $1,000. She also received Form 1099 INT from her bank, which reflected federal income tax withholding of $50. Feroz paid $500 in estimated tax payments and also applied $225 overpayment from her prior year return. The correct amount to report as withholding on her return would be what? Would be what? Okay, somebody ping me why C is not the right answer. Here, Dhoni's tax liability. Yeah, you can ping directly in the live, no problem. Yeah, anyways, so we have also learned that if the total tax for the year after removing all the tax withholdings, estimated tax payments or credits and all, if it is less than $1,000 also, then there's no underpayment penalty, right? So that's why C is excluded, because he owes, after all the withholdings and all, he owes only $640, which is less than $1,000. Okay, so he is not subject to underpayment penalty. Hope this clarifies. Yeah, but in case of Maruti, it is not like that. It is more than that. His total tax itself is 1657, but his withholdings are 417. So there itself 1240. Yeah. 19th. Yeah, go ahead. Yeah, the question here is on how much should be the withholding. Report as withholding on a return. So the question is not about estimated tax payments and all. Just that line, federal withholdings are how much, that's all. So you see $1,000 on W2, yeah, I think, yeah, we should. $1,000 on W2, 1099 INT $50. That's all. That estimated tax payment, then the 225 overpayment and all, ignore that. Yes, that's all. $1,000 from W2, $50 from 1099 INT. So B is the right answer. Very good. Yeah, very good. Very good. So, last question of the day regarding over withheld social security taxes. Because taxpayer had social security taxes withheld from more than one employer, which of the following is false? The maximum amount of social security tax that should have been withheld for 2020 is 8,537. See, the question is which one is false? Then the excess of social security tax may be claimed as a credit against income tax on Form 1040. Next, the maximum amount of wages subject to social security tax in 2020 is 137,700. Next, a refund is only applicable for overpaid taxes on social security tax, not Medicare tax. Go ahead. Which one is false? Okay, you must be thinking what to answer. See, the maximum amount of social security tax that should have been withheld for 2020 is 8,537. That's the right answer, because the maximum social security wages is 137,700 into 6.2%. So it is 8,537. Yeah, so A is right. Then B, excess of social security tax may be claimed as a credit against income tax on Form 1040. Yes, in case he has worked for two employers. In case he has worked for two or more employers, yes, that can be adjusted against the tax credit because the excess taxes might be withheld. Then C, the maximum amount of wages subject to Social Security tax in 2020 is 137,700. Now this one, if you see, if he is working for two employers, if he is working for two employers and with each employer, his salary was $100,000 for 6 months, $100,000, another 6 months, $100,000. So each employer is right in withholding taxes on $100,000, but there the maximum amount of wages is not that. So if he is working for more than one employer, then C is wrong. Next, D. A refund is only applicable for overpaid taxes on Social Security taxes and not Medicare taxes. Absolutely, there's nothing for Medicare taxes. It's only for Social Security taxes. Yeah, right. Perfect. Yes. Very good. So option A is right. A, B, and D are right. Yeah, C is false. Yes. Very good. Money is a guarantee that we may have what we want in the future. Though we need nothing at the moment, it ensures the possibility of satisfying a new desire when it arises. Yes. Learn to make money your best servant. Yeah. Chalo, fine. It was nice spending time with you. At least we completed one topic. So I think we have done estimated tax payments. What is the next topic? So I think the next topic will be household employment taxes. Okay, so probably we'll try to catch up tomorrow also, and we will do household employment taxes, and from there we will go to foreign earned income exclusion. Chalo, take care, enjoy your Friday. Yeah, bye bye, good night.